Welcome to TradeTheMBI.com. This is John. This report is for the 22nd of June, and we had a little bit more of an eventful day. You see, we had this declining shakeout, the dips below, and this DOC that has just said, well, continuation. Now, it really hasn't changed much from continuation, though we've seen a little bit of an increase in the bullish steel, and we flattened out with our midterm buyers in green. And that could be enough to keep it. And really what we were talking about is just the supports, the fact that we knew we needed to come back and retrace the dip previously. And that was right around the 76% line. And this is why we talked about these exact levels just the other day, for this very reason, because they were likely to be revisited, and in fact they were. And intraday we'll be able to see it very clearly because we have the white candles that came in. We also had various reset numbers that were exposed. Now, when we look at the NQ, it's a huge difference here. When we're testing the 76% on the ES, not even dipping below the ABM, which is very interesting too, because even with the Supreme Court ruling against Amazon online retailers, saying they just have to pay sales tax, really is that going to impact them all that much? Probably not. It does help retailers that are brick and mortar at least fend off that, depending on which state you're in, it could be as much as 10% savings that people would get looking for the out-of-state. Euro, as we expected, on the rising shakeout in that, now the dip below the orange, the little bounce back move. So the critical spot here will be the breaking of the 23% moving back up. And we'll see if Euro can hold on to it. With the treasuries now reaching a point where their yield is equal to that of the market return, there's going to be some competition for market dollars. And that will be an interesting one because if that starts to play out, we could see some more volatility, more dips, people more willing to pull out, take the sidelines, get a little bit higher cash percentages, not needing to be in the market to get a return, which is the first time in well over a decade. So that is a big development. And then the question about maintaining oil and keeping it in check is the only thing that's really going to keep inflation from becoming the big green-eyed monster of the market going forward. There's going to be a bottleneck at some point. We don't know that we've achieved it yet. There was still so much labor excess in the economy that filling it up is going to take some time. And how quickly that happens will be interesting, and whether or not people have enough qualifications. So let's shrink up this day because it was quite a day of exciting action. So we started out in that pre-market, beautiful opportunity to short with the white candle right here, so we knew that at least there was going to be a dip to that point. And then at that point, you ended up with the start of a gold candle. Like I said, gold candles below the 50%, we tend to make new lows. Usually for me, I like to take some type of gain somewhere between the 23 and 0%. It's just prudent. It's the same concept as the full extremes. I'll usually take a gain unless the signal is like completely clean, if you got continually dropping shakeout, stuff like that, usually I'll let it, go with that. But like we see a little bit later on in the last signal, there's quite a bit of improvement in the signal, and it's like you have less probability that one's going to hit. We ended up with another gold setup right there. Let's enlarge it just a little bit to make it easier. So you can see there's the gold coming through. We made new lows and then continued to drop ugly shakeout there. Then we ended up with a white candle. Perfect. Turned into blue. So resetting, matching lows, much higher shakeout. That one became the little bit of the buy. But we ended up with another gold below the 50%. This one kept trailing up because, again, you had the much better shakeout readings. As well as it wasn't a horrible DOC with the red rising. You were already above 7.5, but it got right at the 50%, and that was all it could muster. Usually I expect sometimes, particularly with this one, you get it over the 23%, I usually expect it to go just about to the 50, usually not more than the 61%, and then I start to look for first signal to take advantage of that. In this particular case, the orange really spiked above, it's right here, the bar right before the big decline. You had the pretty solid breakout. This is the first move of the orange getting towards the 7.5, so it was the beginning of the first real term move of an algorithm exposure. And sure enough, that led exactly where? Oh, that's right, to the white candle line, which was marked right over here. So once that covered, we ended up with another little pop and then another gold setup right below the 50%. That made new lows, to actually blew through the white candle line there without any effort whatsoever. And then that brings us to the last one that was happening at the end of the market. And again, for this one, I had set my stop period. I was looking for right around the green EBM that had been established right here as the dip down. That was thinking this was all that exciting because we had moved to positive shakeout and we had much stronger readings. It still was enough to produce, but then you can see it did start to produce that turnaround. You ended up with the one dip and then boom, positive shakeout. And fine, overdone in as far as the algo move, suggesting that we've got a retrace value all the way to the low right here, 54.75. So as this starts to get pumped up there, we're just beginning to see the first signs of what could be DOC spread setup. You had this huge opening of the snake here, with the green above, one of the few occasions, but with that rising red in it, you're facing a little bit of an uphill battle. So for me, it's one of those where if you can start to short up by the highs but not down at the closes, then I think you got a better chance of filling in those, at least the near-term positive extremes above the 76%, usually what happens first. Whether this will get some trail-off action early or not, it's hard to say at this particular point. I mean, we know what the retrace has to be going forward, but right now you're in the European session and all looks pretty decent. So I think this is just going to be a mixed bag, but if we do see, and this is the issue with shorting in general, you have to have some type of negative news or factoring. You can't just say valuations are high and that's the end of it. Is growth continuing? Is there some appearance that growth may not be sustained, and if growth is not sustained, then those valuations that exist are a little bit exceedingly optimistic. This is projecting that you're going to continue that growth and or increase that growth. And this is really where the market is based. And so while intraday, certainly we can make broader assumptions, when you're looking at it from a daily standpoint, not so easy to just arbitrarily suggest that the market is going to crash or cave. That's the long and the short of it for now. As always, trade well. I'll keep posting as necessary.